Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is 10:30 a.m. in the UAE, and we have Brent crude oil trading this morning out of Asia trade, essentially little changed, keeping its head above $70 a barrel on Brent, however, just below this morning, $71 a barrel. Situation unclear. Let's kick off this morning in the UAE in Dubai with Jorge Montepecou, Managing Director Benchmarks at Onyx Capital Group. Jorge, this does look a little bit like an oil market caught in the headlights. $10 rally through the month of February with the growing tensions around US Iran war possible, etc. But now it seems stuck. How do you sort of encapsulate the current state in the oil markets? Looking for direction?
Well, I think it's looking and hoping, and this is going to sound very bad, but hoping for some war action so all the longs can sell. The traders I have interviewed essentially don't want to be short, they want to be long, and they bought ahead of the war action. And at some point, they have all these positions and they don't want to sell them out, right? Because in case something happens. At the same time, they don't want to add more in case nothing happens. And therefore, the market is stuck in this low 70s period, waiting for the big rupture, whatever that rupture is. Is it the US getting tired and finally, whatever the consequences are, we're going to bomb? Or will reason prevail and say, this is a risky endeavor we're getting into here, and therefore, let's negotiate and let's pretend we won. So that's where the market is, but I would say that many people are long and waiting for the moment to sell. And this means that there is an action tonight or tomorrow night, more likely, if it ever happens. It will be like any other time where everybody takes that advantage just and that timing just to sell, and then the market corrects down immediately. So the market to me doesn't feel strong, and we saw a major correction in dated Brent last night as well. So the physical is looking very weak as well. And there were so many people who stopped out last night in the derivatives market. So all the signals are there that a correction is coming.
Kate Durian, MEIS contributing editor and non-resident fellow at the Arab Gulf States Institute, nicely located sort of halfway between Dubai and the Gulf States Institute in Washington, sitting in lovely Italy. Kate, in the midst of all this fog and uncertainty of the immediate story, OPEC is due to meet in the coming days to decide on their Q2 plans. They, of course, paused their increases that they had been carrying out through most of last year. It was a pause for Q1. What do you think they face in their decision for Q2?
Well, I mean, I wouldn't want to be in their shoes because nobody knows. I mean, everybody was expecting to get some clarity from Mr. Trump's speech the other day, the State of the Union. So I think I mean, obviously there are leaks. I mean, if you've looked at OPEC and OPEC Plus ahead of their meetings, it's very rare that anything leaks out, right? They meet virtually, they make an agreement. But it was widely expected that they would resume their, the unwinding of the voluntary cuts, maybe at 130,000 barrels a day, which isn't really going to tip the market one way or another. And there's also reports, I think I've read it on your
Daily Digest.
On your Daily Digest today, that the Saudis are chartering super tankers, in expectation. We've got a lot of oil on the water, so nobody really knows what the supply situation is. Iran has got a lot of oil on the water that they can deploy in the event of disruption. So I think, yes, we will probably see a gradual unwinding.
And that's something they committed to last year, and it's basically about implementing what's already been committed.
Well, not really. I think they said they would review the market in March to see whether they would unwind the rest of the voluntary cuts. So, but I think yes, it's sort of from the leaked
Once
speech.
upon a time, way back in the distant memory, they had laid out this incremental, sort of very specific roadmap that they accelerated last year.
Yeah.
But somewhere along the way was the idea that all of these cuts would be unwind at whatever incremental size. And as you said, 135,000 barrels for the coming period.
Yeah, I think that's what is expected. Whether they change their minds, I mean, they do spring surprises sometimes.
Arn Lohmann Rasmussen, Chief Analyst and Head of Research at Global Risk Management, sitting in Copenhagen. Arn, one of the things, I mean, in terms of this market, as we say, up $10 through February, mainly on the stress around the uncertain outlook with US and Iran, and the US delivering a huge armada of naval vessels into the region here. But meanwhile, back in Europe and back in the Ukraine Russia war, there is increasing, and has been for some time, and I'm getting to the idea of what it might signal for what's coming next here, is that Russia and the Ukraine now are very actively targeting each other's energy infrastructure and have been increasingly doing so for some time, which I think contributes to this sort of floor in the oil price that otherwise was sort of expected to be a bit bearish last year. But nonetheless, these are pieces in previous sort of moments of conflict here in the region, and particularly with Iran last year, the oil infrastructure was kept off the table from the target list. But we sort of feel the signals the Iranians saying overnight yesterday that they're going to sort of change the rules in retaliation if they are attacked. What are your thoughts about the pricing in of energy infrastructure being targeted in this region as it is in the region that you're sitting next to?
Yeah, good morning, Sean, and good morning to the rest of you. Yeah, of course, there is a geopolitical premium in the enterprise, and it is related to energy infrastructure being interrupted somehow. Of course, the Strait of Hormuz is sort of the worst one. In respect of Russia, it has made it more difficult for them to get their oil out. The sanction is, of course, also a part of that, but the Russian oil is, of course, still flowing. We're seeing a bit of this Druzhba pipeline through Ukraine was apparently bombed by Russia a few weeks ago. It's now like high politics. Are they going to repair it or not? But it's still a relatively small amount of oil. But of course, Russia adds to the geopolitical premium in the market. There's one market I like to look at to get an idea how concerned is the market about this, and that is the distillate market, basically ice gas oil in Europe, in Rotterdam, and the crack. The crack has been edging higher over the last couple of weeks, but it's nothing compared to back in November, for example. We also have to say that it seems like the Ukrainian attacks on Russian refineries have slowed down somewhat again, but there has been this huge attack on the Druzhba hub deep inside Russia. If we look at the flows, the Russian oil is coming out, but it seems like more and more oil is actually stuck at sea. But it also adds to this by the rumors of the fact that Jorge basically discussed, right? I think I would call it that you buy into this, and if nothing happens, we are probably a bit too high in respect of the flat price as we speak. And I think the OPEC is also aware of that. They may end up doing the same as in April, that they actually add oil into a quite bearish market, because if geopolitical premium adds lower, if some of the Russian oil stored at sea, also Iranian oil, reach ports, we could see.
Is it fair to observe that the Europeans, the European countries, and we're seeing the UK in particular recently, getting more aggressive in their policing of the sort of dark fleet and the Russian oil that's coming out?
Yeah, to a certain degree, I think, but they're still going through, for example, the Danish Strait. We cannot do anything about that. We couldn't get the sanction package.
We can't do anything, but if they're illegal, if it's dark fleet, if it's
and it seems like, for example, the ban on products based on Russian crude actually have had an impact, for example, on the Indian import of Russian crude. For example, Reliance are now allowed to export products to Europe. And I think it is because they can actually show that they are not buying Russian crude. So in that way, it has an impact. But the dark fleet itself, yes, there are more stories about ships being boarded and so on, but it's still a relatively small amount, I think we have to admit.
Jorge, one of the things that have been creeping along in the background that with all of the sort of front headline news hasn't got as much attention, but it does now, it seems to me, and that is the declining extra idle capacity that the world has sort of relied on over the last number of years post-COVID, which was massive and then has progressively shrunk. Most notably, of course, in the last year with OPEC Plus increasing its supply and so reducing its amount of idle supply, or the ability to bring on more supply. Now with this potential conflict in the Gulf, the question does come up: how much more can Saudi Arabia pump in a hurry, UAE pump in a hurry? How much more idle capacity is there in this group to sort of counter for any potential unexpected disruption? Your thoughts on where the sort of idle capacity that's built into the sort of into the system as a kind of an insurance. When you dial 911, there's somebody answering the phone. Your thoughts on where that plays in now going forward?
Yes, and I'm so glad you raised that issue, because it's clear that in the last 4 months, really, the countries that have had idle capacity have crept up to a level that I call the comfortable production level. Because you have a level at which you're comfortable to produce, a level that may be sustainable with some minimal investment in the long range, and some peak capacity when it's called for in an event. So if there is a bombing, if there's war, you go to the peak, but the peak is not sustainable. At the moment, based on what we hear, the Saudis are producing maybe around 10.5 million barrels a day. Do not trust the official data. It's really worthless. And one of the reasons the Brent Dubai has widened, meaning Dubai has been weakening relative to Brent, is because there's more oil coming out in the Middle East. But that means in the event of an event, you have less to come out. So there's not much really, unless you go to peak capacity, but again, that is not sustainable. One of the key things that we need to address is that there is more than one market level. You could say that there is the numbers we look at, Brent, in ICE, in Platts, in all the various publishers, including us, as well as the numbers for distillates and gasolines. But then you have another market, which is the price using a dark fleet. And right now, the premium imposed by Europe on its citizens is not really a discount imposed on Russia. Some of that, but it's a premium imposed on its citizens. It's so huge. I met with some of the shippers yesterday, and to bring oil, say, from the US to Asia, you have to pay for a VLCC $18 million. And the VLCC carries 2 million barrels. So that's $9 a barrel for the freight. Then you take that oil to India, and then you have to use a compliant vessel to take the distillate from India to Europe. Who pays for that? It's a huge premium that the poor Europeans are paying and getting poorer by the day. So I really don't understand that. But that results in two markets. the overpriced market based on the cost of the very expensive freight, and the market that is much cheaper because it's using cheaper freight. Of course, as Arno was saying, this oil still gets out and goes to some countries. It maybe doesn't go to Reliance, but maybe it goes to other Indian refineries, or maybe it's lighter in the high sea and put in compliant vessels. Who knows? Somebody extracts that value, but the Europeans pay the price because
Well,
they're
certainly
short Europe.
the freight is increasingly, what, at 6-year highs now, $200,000 a day for a VLCC. This is massive money. Kate, as you are the closest to the big news of the day, we welcome your thoughts. Iran and the US, it would feel like, is the last chance saloon today in their meeting in Geneva for some kind of breakthrough. I've always felt these talks, they've kind of been more show than tell, if you like, a bit more performance rather than substance. Your thoughts on the outcome and how significant today's meeting is?
I mean, if you listen to what's coming out of these talks, the Iranians are not willing to give up enrichment completely. What we understand is they've sort of they've said that they will downblend the enriched uranium down to sort of under 4%, and a 7-year moratorium, which I don't think is going to be accepted by the US side. And they don't want to talk about their ballistic missiles. So I think, and I don't think the US is really insisting on the ballistic missile sites, no matter what they say, but I think it's more on the nuclear, and that was sort of quite clear in what Mr. Trump said. There was some suggestion that, oh, there wouldn't be an attack before Modi leaves Israel, where he's visiting at the moment. But, you know, sort of, I can't see that there's going to be an acceptance. I mean, the 7-year moratorium on enrichment is not going to be enough because the 2015 agreement.
I mean, just to sort of circle away from that, from the point of view of the bigger picture here, when you see the scale of the military buildup on the U.S. side, does that look to you like a negotiation tactic or a clear intent to attack regardless tactic? I mean, you don't need to have half your Navy in order to negotiate whether you're going to do 4% or 3% on uranium. I mean, no other American government have had to do that. Is this not a foregone conclusion? I mean, you've been covering wars in this region for far too many decades, perhaps, but nonetheless, what you've seen before, as I said yesterday, if it walks like a duck and talks like a duck, it's a duck. I mean, is it anything other than that?
Well, I think the problem is we don't know. We don't know what the targets are, and we don't know what the end, you know, what the Americans want, what Mr. Trump wants out of this. Is it regime change? Is it to stop the nuclear program? Is it, it's what Israel wants as well. You know, Israel wants an end to all ballistic missile production. The Iranians are still buying weapons, seeking weapons from China to attack vessels, ships. Yes, I mean you don't have more than a quarter of your naval force in the region, and you're sort of moving it around, unless you want to attack. But again, I don't think anybody can tell what's going to happen. There could be a miscalculation. It could be that they can force an embargo of vessels go through the Strait of Hormuz. I don't think Iran has the capability to actually shut down the strait. It's never happened before, but they can cause disruption. And also, what I find, that nobody's really talking about very much is that the Iranian Revolutionary Guards are not going to give up power very easily. So if their back is against the wall, there's going to be something that could trigger an escalation, even if it's just, limited military strikes, which is sort of pretty pointless because we had that in June. And nothing really happened. Iranian oil is still flowing. The regime is still in charge, brutally suppressing protests. If there are more protests, that could provide the justification for a strike, as Trump has said. If you coming to the support of the Iranian people, which he didn't during the first round of protests. We're seeing students now protesting. So who knows? I mean, it's very, very hard to say. Is there going to be an attack on Iran? But yes, when you have so many forces. You know, you've got your naval, you've got 2 aircraft carriers, and that costs a hell of a lot of money. So how do you justify that to the American people? But again, war is unpopular in with the American public.
Arn, speaking of wars unpopular, the Russian invasion of Ukraine is just past 4 years, and given all the distractions, it sort of went nearly unnoticed. But nonetheless, it sort of shows you once you push over that first domino, as Russia did 4 years ago, thinking perhaps it was going to be a relatively straightforward exercise, and 4 years later, and how whatever level of tragedy later, it's still grinding on. There's been a lot of momentum, or certainly noise, in the recent times of the year of Trump's presidency, but no real progress. Your prognosis, does Europe have any real momentum here to wrap up this war, or does it just grind on? Is the momentum window past now, and we're kind of locked into this being endless?
It is it's a war like in the First World War, where you are stuck in your trenches, basically. Ukraine actually gained a bit of momentum the last couple of weeks, but it's a small gain, but you are basically stuck there. But Russia is also suffering from that. They are apparently now losing more soldiers than they can actually get into the force. Are Europe getting tired of supporting Ukraine? I don't think so. But we are in a democracy, so it is possible for Slovakia and Hungary to block the support. If anything, I guess that Trump brought Europe much closer together with Putin. Putin made Sweden, Finland join NATO, 2 very strong military countries, and I think the last 2 months, Europe, Greenland is actually a part of that, has actually moved closer together. That's much more. I think that's a bit more of a self-confidence that we can actually do it on our own. It would be completely out of the that we were discussing whether we should have a nuclear umbrella of our own in Europe. That here in Denmark we're discussing whether we should accept nuclear weapons on our own soil. That would be out of the question just 2 years ago. So if Putin have achieved anything, he's actually brought Europe closer together. And from my personal point of view, I hope that then Orban will be gone in April, and then it will be a bit much easier to work as a unified Europe. But the war, I think, it will continue. Trump said he will solve in 24 hours. We're now in, as you said, 1.5 years into his presidency, or a bit less. Nothing has really been achieved. If anything, we are at a worse place because Trump has more or less aligned with Russia, which is a bit strange, but that is the case. Ukraine cannot give up Donbass for security reasons. It will open up for new attacks that they cannot defend themselves against. So we are locked into
An
this for a
unsolvable
long.
Rubik's Cube.
It is solvable if the Americans would actually step up the pressure on Russia, but apparently they're not ready to do that. Then we could actually solve this. I would, it's my opinion.
Let's go to the survey question, which is touching on the original discussion point of OPEC. Meanwhile, somewhere in the parallel universe, there is a real oil market, supply and demand at work. What will OPEC Plus decide for oil supply in Q2? Maintain the pause that they've done in Q1, or initiate a small rise, as mentioned by Kate, 137,000 barrels for some reason seems to be the number. A small cut to support prices that are somewhat inflated. Everybody would generally agree. Most forecasts have oil prices nearer 60 on Brent for the year. And obviously they're well above that given the current geopolitical risk, but could very quickly return there if indeed once this particular tense moment passes. Or would OPEC Plus go as they did last year and surprise the market with an accelerated increase, not just a little incremental 1 month jobs, but compact 3 or 4 months into 1 month as they did through the second half of last year. So what do you think OPEC Plus does here for the Q2 in the coming days? Jorge, meanwhile, again, talking about the fundamentals, despite the sort of traumatic reality we're all living with here, you're now living in Dubai, the immediate uncertainty of this conflict on our shoulders. But in the wider sense, China seems to be performing economically quite well, massive trade surplus. The American economy still doing very well. I mean, there's fundamentals here. The IMF indicating some positive GDP growth numbers for the US, the world's biggest economy. You know, back at base here, the fundamentals are underpinning this oil market.
Yeah, from a fundamental point of view, the most significant event that happened this week was the Supreme Court ruling on leaving aside the theatrics. What we have now is a 10% tariff regime. That is actually quite positive for the US because an entity, an economic unit, can perform better without tariffs. So Trump was damaging the US with the high tariffs, but now the US will perform better. China
is it not bring back a great uncertainty because the Trump fighting it? I'm not giving back the money. It's going to be 15%. I mean, what had settled into the post-trauma of the announcement last year, it kind of found its groove and everybody had sort of settled into it, even Asia, and it's sort of performing. But now we kind of feel we have uncertainty again. Your thoughts on that?
No, I think the uncertainty has lifted. It's 10%. That's what it is. And we have that for 5 months. And we will not have it for longer because the Republicans and the Democrats will not give the permission ahead of the coming midterm elections to increase taxes on Americans. So the tariff regime is rolling out. It's the end of that process. That is very positive for the US, is very positive for China. So the two largest economies can perform more efficiently if the tariff regime is low or disappears. So that's very good for economic performance going forward. And as we saw, Merz, the German chancellor, is visiting China, so they're also getting tight. So to add to Arne, it's not just Europe getting closer together. Is Europe and China also getting closer together? See how many PMs, chancellors, leaders have been trooping to Beijing non-stop this year, right? So the other side of the world is tighter and trying to find an economic better well-being. This is very positive.
Okay, sorry, Arne, you wanted to jump in there?
No, I very much agree with Jorge that there is an uncertainty around, is it going to be 10, 15%, and we probably come up with new ideas. But what this week underlined is that basically Trump is already a lame duck. And that is good for the world economy.
Yes.
A lame duck with a big army.
Yes.
Yeah, it was unfair.
The lame duck domestically, perhaps. The foreign presidents have a lot of leeway on the global stage. Kate, last word to you. One of the things, again, OPEC plus related, we've seen over the years, OPEC countries find themselves in a lot of disagreement amongst each other, and yet the group holds together. We're kind of in another period of that at the moment, and I'm wondering, as they meet this week, coming week, sort of first real meeting, not the first, but nonetheless, this is some fractures in the group. Your thoughts on any of that bleeding into their decision making?
I don't think it will. Just one more thing about the tariffs. I don't think that 10% can be taken as a given. Yes, it is there at the moment. It hasn't increased, but the Treasury has said 15% is still on the table and it will come soon. So I think, if you're an exporter, the uncertainty is really just,
And the other thing about those tariffs, the other thing to add to your point, Kate, and just to the point I was making about the uncertainty, is that they only he has only the authority to bring them in for 180 days. And
whatever, 180 days, yeah.
And then you don't know what happens after. So that's kind of where it creeps in. But just sort of close out with the OPEC point,
on the OPEC
unity,
stuff.
decision making.
I think, I think they've survived wars between their members. I think, it's not really going to have an impact. They don't have to face each other because they hold virtual meetings these days, and the decision's probably made already. And, on the OPEC front, I think you're talking about Saudi Arabia and the UAE and the sort of, the rift between them over foreign policy and over, the conflicts within the region. I think they will sort of, they have managed in the past, Iran-Iraq war, Kuwait-Iraq war, etc. So I don't think it's really going to have an impact on any decision they might make.
Okay, well, we'll wrap it up there. Big day in Geneva today. The mood music will be critical. Markets could move quite aggressively on any rumors that circulate there. View in this room that the small rise is the sort of pathway forward for OPEC in the second quarter, and that seems to be creeping into. I mean, at $70 a barrel, regardless how you get to $70, why not push some more barrels onto the market? Thank you so much, Jorge. Good to have you at the table. Arne as well. Best greetings to Denmark and to Italy, our Italy correspondent. We're very jealous. Kate Durian, lovely to see you. Thanks for joining us early this morning. Have a great day, everyone. All the best.
Thank you.
Thank you.
Bye.